Put it in context for us, Larry. What do you think? Is it being overstated here that we're a crisis is upon us, or is it something we should be concerned about?
Yeah, there's a lot of overstating on Twitter for sure. But I think the bigger picture, Andrew, is this is so important. When Lehman and Bear failed, okay, think about that moment. The core capital of the banking structure of the planet Earth was very solid, and that is government bonds, right? So in the last 20 years, we've never had a moment where you've got credit risk, which is obviously rising recession in Europe, right? So that's clearly growing. So any bank in Europe is facing increasing credit risk, but also your balance sheet is facing massive interest rate risk. I mean, some of these UK bonds dropped, 15, 20 points in the last month, right? So your core capital's in flames, and your risk capital, your risk-weighted assets, as you described, are with Archegos, Greensill, Citrix, the LBOs blowing up. It's just a real problem, and these banks definitely are not passing a U.S. stress test. So there's definitely, I think, a 95-100% probability that there's some type of forced merger bailout in the next, say 30 to 60 days, but it's not a Lehman moment.
Okay, well, let's try to unpack that, Larry, because the idea that you're saying there's close to 100% certainty that there's some kind of merger or rescue or bailout of this company in the next 30 to 60 days, and yet you're suggesting it's not a Lehman moment. Try to make sense of that, square the circle for us, if you could.
Well, like you said, they have better assets. You've got a bigger, backstop of the government. So the question is the Fed going to continue to put stress on the global system? You've got 50 trillion more debt today on the planet Earth, 50 trillion than you did 5 years ago in the last hiking cycle. 50 trillion. So the only way to get out of this, to avoid that type of dynamic, if the Fed, you got the Federal Reserve promising 125, 150 basis points more hikes. They're going to get stopped. They're going to get frozen. They're going to get stopped in their tracks. If they continue,
and Larry,
with this
that may very well be why we're seeing green on the screen this morning, this expectation that maybe the Fed is going to, quote unquote, blink, as they say, or if you're data dependent, maybe you look at this data and say, OK, we've done enough. But Larry, just to the point about Credit Suisse, October 27th is the date to mark on your calendar, at least as of now. Well, that's the date that they are planning to release their earnings, but also their restructuring plan. The question, and Becky raised it earlier, is, do they have to announce that plan earlier than they had anticipated? How much of that plan involves selling assets? Can you sell those assets into this market if you're going to do it without it being a fire sale? And then the secondary component, and you don't want to create a run just by even having the conversation, but if you're a wealth management client or some other client of the firm, are you calling your broker right now, having a conversation about whether you want to keep your money at that firm?
Exactly, and that's the problem. Is it's a melting ice cube, and you and I lived through this 14 years ago. So it's a very dangerous process because, number one, like you said, they're out there on October 27th. That's a long time. They need to get this to the market. The talent within the bank is leaving. So if you're like if you're one of their top traders and they're out there on October 27th and you're looking at your equity, your AT1s, your what we call COCOs, they're down 7 points this morning. So institutional investors that we work with around the world are saying that they wouldn't invest without a backstop from the government. And it looks like, at the end of the day, it looks like there's going to have to be some type of backstop from the government to get this thing through to the next.
When you say backstop from the government, are you talking Swiss government? Are you talking U.S. government? Are you what government or central bank are you talking about here?
Swiss government, for sure, because if you just look at the way, not just the CDS is trading, but the subordinated debt, we run an institutional chat within hedge funds right behind me. And it's clearly there's lots of stresses there across the capital structure. So, you're talking about a bank that needs to fund itself. And right. Keep in mind, non-performing loans are right now marked in the books at 1.1%. You got to think heading into an economic downturn, that's going to go up substantially. So really, it's really a melting ice cube.